UK Prime Minister Boris Johnson announcing today that he will be ending his reign as the leader of Her Majesty's government. His announcement outside of 10 Downing Street comes as he survived a vote of no confidence on Monday, but by a smaller margin than hoped. So the British pound gaining on the news. As you can see, there's the pound. It's still strong. And there's the euro, a little weak here versus the U.S. dollar. But we have seen over the last few sessions the dollar really strengthening against the euro. With us now is Charles Schwab, Chief Investment Strategist, Ann Sonders. And Ann, I think on one side, it's probably a good thing for Americans that want to travel to Europe to have the dollar and the euro on par. That's nice. But is that good for the American economy?
Well, so there's sort of the good side and the bad side to a stronger dollar. You mentioned the travel aspect. That's there. Because so many commodities are priced in dollars in the global market, that actually helps bring commodity prices down, which in turn could put some well-wanted downward pressure on inflation. However, if you look at S&P earnings, because there is a large percentage of revenues that come from overseas sources, it's a net negative for corporate earnings. And as we're heading into second quarter earnings season, that is something that could come into play relatively soon.
Yeah, there seems to be a big debate about what second quarter earnings are going to look like. Some say that, well, we'll meet expectations, and some say that it might be a really rough quarter. I was looking at the second quarter stock funds. Stock funds lost 16.3% in the second quarter. And I'm wondering what that correlation is going to mean for these corporate numbers that we're going to start to get.
Yeah, I think this may be the first quarter in about 2 years where we find that the expectation bar has been set a bit too high. It was the opposite story really in the last 8 quarters, where we had either record or near record, what they call beat rates, the percentage of companies beating estimates, and those estimates continue to go up. And I think this is going to be a bit of a trickier quarter. You have about mid-single digit expectations for year-over-year growth for S&P earnings, but so much of that is driven by energy. If you exclude energy, the expectation is actually for negative year-over-year change in earning, but only to the tune of about 2 or 3%. That bar may even be set a little bit too high. I think the outlooks are going to be important, and the profit margin story. So for a lot of reasons, especially forward-looking outlooks, I think this is going to be a very important earnings season, which will kick into higher gear starting next week.
Okay. No, I will be looking for those forecasts then. Thank you for that. Let's talk about the Fed then. We got the minutes this week. And, you know, the topic of the day was inflation. If you look at the Fed funds futures, they're still putting up a nearly 100% chance we're going to get this 75 basis point hike last week of July, and then a 50 or 75 hike in September. What is your interpretation right now of the Fed? I have never seen, I don't think, in 20 years, the Fed be so knee-jerk when it comes to how reactionary they were to the data. And I say that because next week we're going to get CPI. That's right before their next meeting.
Yeah, and I don't know that any one particular print matters. You did see core CPI peak back in March. I wouldn't be surprised if we're in the peaking process for headline inflation, especially given the recent retreat in oil prices. But the Fed has been very explicit about saying they want to see a series of better inflation readings, not just a peak and then a move down in 1 month. So I'm not sure the next CPI report changes the thinking around the July meeting. As you said, 75 basis points is pretty much a given. I think looking ahead to the September meeting, that becomes more interesting because we will have had 2 jobs reports, including the one tomorrow. Employment is the second of the 2 mandates that the Fed operates on. They clearly have their eyes almost solely focused on inflation. But if inflation does start to retreat in a meaningful way in conjunction with a deterioration in the labor market, that could maybe soften the signals in advance of the September meeting. So the data will inform what happens in terms of the outlook for September. But I think 75 is basically a done deal for the July meeting.
Okay. I'm glad you brought this up about the labor market, because, you know, I'm trying to reckon. On one side, you've got this really tight labor market. I'm going to be looking at wages in the morning in particular on the corporate side, but also just the fact that you've got this tight labor market. Claims were a little bit higher than expected this morning, but not by much. That doesn't seem to go along with this argument that we're in a recession now. How can you have a tight labor market, more than 11 million jobs available in this country, which we learned from Jolt this week? How can you have that and then also have a recession happening at the same time? Does that correlate to you?
Yes, it does, but here's why. So here's what happens with regard to recession. So the official arbiter of recessions, the NBER, what they do is when they conclude that we're in a recession, they make that announcement. At the same time, they tell you when the recession started by month. In doing so, they go back to the peak in the aggregate data they're tracking. And the data that they're tracking are primarily the four components of the Coincident Economic Index. So it's payrolls, it's industrial production, personal income, and business sales. So again, they go back to the peak in the aggregate data. By definition, at the peak, you're in a fairly robust state. It's that backdating nature of recession starting. So that's why we've had the view that if a recession is happening, it may be the case that it has already started, based on the peak being the start, not the point at which it's declared.
Gotcha. Yeah, it's always the lagging data. I hear you on that one.
Right.
Liz Ann Sonders, it's great to see you as always. Thank you so much for coming on.
Thank you.
All right.
My pleasure.